Welcome to this educational series, Unraveling Crypto Taxes in Australia by Crypto Tax Calculator. I'm Patrick, and I'm here to break down the complexities of crypto taxes in Australia so you can file with confidence this tax season. In this series, we're covering the simple stuff like capital gains tax and income tax, as well as diving deep into complex on-chain transactions like staking, DeFi, and NFT trading. DeFi has brought about incredible financial products that are accessible to anyone with an internet connection. One of these products is peer-to-peer lending and borrowing markets. The hassle of applications, paperwork, and credit checks is now in the past. If you have the right type of collateral, you can spin up a loan in less than a minute with just a couple of clicks. However, as with anything to do with crypto, there are tax implications that you must be aware of. Like we have discussed in previous episodes, the issue of ownership is crucial in determining the tax consequences for crypto loans. If you decide to lend crypto and lose ownership of it, the ATO may have something to say about it. In an ATO's community forum, a staff member of the ATO stated that when crypto is loaned either to an individual or a lending protocol, this may constitute a disposal event depending on the particulars of the loan, and therefore your transaction may be subject to capital gains tax. Another element to this situation is the interest received when lending your crypto, whether you use it as collateral or not. To help explain further, I'm going to break down some scenarios. Example 1, you loan 3 Bitcoin worth a total of $1,000 with a flat interest rate payable in Australian dollars at 10%. You maintain ownership over the Bitcoin during this period, so there's no CGT payable. At some point in the future, you receive 3 Bitcoin from the borrower, your principal, as well as $100, your interest payment. The $100 you received will be subject to income tax according to your tax bracket. Example 2, you acquire 3 Bitcoin for a total cost of $800. 9 months later, you loan your 3 Bitcoin, now valued at $1,000, with a flat interest rate payable in Australian dollars at 10%. Due to the terms and conditions of the loan, you do not maintain ownership of the Bitcoin during the period of the loan. Because your ownership ceases at the time of the loan, you must pay CGT. To calculate your capital gain, take the value of the Bitcoin at the time it was disposed, $1,000, and subtract the cost base, $800. This leaves you with a capital gain of $200. 6 months after the commencement of the loan, you receive your 3 Bitcoin back, valued at a total of $1,000, as well as your interest payment of $100. You must pay income tax according to your income bracket on the $100 interest. Your ownership of the 3 Bitcoin has reset, meaning that you'll only be eligible for the 50% CGT discount after holding the Bitcoin for 12 months from this point. If you sell the 3 Bitcoin in the future, your cost base is $1,000, the value of the Bitcoin when you reacquired ownership. As you can see, this is a complex area, and you should seek professional assistance if you're unsure. With complex transactions, the devil is in the details. Crypto Tax Calculator was built to handle complex transactions and records all the components of these transactions automatically. Head to cryptotaxcalculator.io to sort out your crypto taxes with confidence. That's the last video in this educational series, Unraveling Crypto Taxes in Australia by Crypto Tax Calculator. If you want to learn more about crypto tax or need to sort out your crypto tax nightmare, head over to cryptotaxcalculator.io and get started for free. Thanks for watching and stay tuned for more videos in the future. Bye for now.